read this disclaimer. Good morning, good afternoon, good evening, depending on what time you're watching this video. This is Ed FX Trader, right? Giving you another video. Now, in this video, I want you to pay close attention to what I'm about to teach you. Oftentimes, you hear I say that if we can just identify patterns in the market, then trading really is that simple. The ability to identify patterns and just trade the patterns. Now, to learn how to do this requires spatial intelligence. And I'm going to spend some time here just teaching you a little bit about spatial intelligence. Now, spatial intelligence is defined as an area in the theory of multiple intelligences that deals with spatial judgment and the ability to visualize with the mind's eye. And now this becomes very important in Forex trading. So I'm going to do a plethora of examples just showing you what to look for and how to go by looking for it. And we're going to primarily do this with the monthly time frame, right? Because it's easier to see the patterns with the monthly time frame because it factors out a lot of the noise. Now, when you turn on your charts and you go onto any time frame, I am on the Australian versus the Canadian dollar monthly time frame. Now, one of the crucial things about Forex trading, what that makes Forex trading what it is that you're trading one country's currency against another. And what oftentimes happens is that a range or a channel is created. Now, a range in Forex trading is also called consolidation, where price just moves from this point down the bottom to this price up the top, and then from this point up the top to about the same area down the bottom, and price just tends to remain in that consolidation, in that range. Sometimes the consolidation may also be sideways, which is in Forex that is referred to as a channel. I'm going to show you a few examples. Now, reason why this is important, because as you know, I've said many times, once you can just identify the pattern, that is all that you need. So the first step that you want to do is, this takes time to learn. You go on a monthly time frame and you compress your charts. And you just ask yourself, well, what do I see? Or what am I looking for? Now, because in Forex trading, you're trading one currency against another country's currency, because of imports and export, because of trading, import and export, business between those two countries, oftentimes price are going to be within that same range that I made mention of, and it will stay in that range for months, for years to come. And I will show you many examples of this. Now, I want you to develop a mindset that whenever you look at a monthly time frame, by default, I want you to look for ranges, which is to say consolidation, and I want you to look for channels, and I will explain those. A range is, let me just show you, the market moves, let's say, between these 2 points. So this is consolidation. Let's say the market moved from here to here. Let me just draw this out first. The market moved from here to here. Then it moved from the top down to the bottom. Sometimes even a little bit below, a little bit above. But nonetheless, the range is what is important. The consolidation is what is important. So this is consolidation. It is actually said that 70 to 80% of the times the market is actually in consolidation. So this is consolidation. This is a range. Okay. Sometimes, however, let me just delete this. The consolidation may be sideways, which is referred to as a channel. Sometimes it can be sideways, which is to say, let me just show you this. Sometimes it can be something like this. Sometimes it can be something like this. And price just simply moves to the top, down to the bottom, to the top, down to the bottom, right? When it is still in consolidation, but it is sideways, and we refer to this in the Forex market as a channel, right? So this is a channel. Now, when you're looking at the monthly time frame, I want you to, by default, look for channels and look for consolidation. Okay, so we're going to go to a number of pairs and we're just going to just look. Alright, now when I look on this, because my mind is by default looking for consolidation, it's very easy to see the consolidation. Do you see it? If you look closely, market is just moving. I'm going to make this a little bigger, make it blue. Market is just moving from the top here to the bottom here, and we're actually at the bottom now. If you look from 2013, that price has been doing this. It goes from the bottom to the top, from the top to the bottom, from the bottom to the top, and it just continues to do it. So all that price is just doing is moving from top to bottom. Now look here carefully. I want you to actually see this. Start right here. It has been doing this from 2013, from the 4th month, April 2013, and now we are in October, and this channel has remained October of 2018 for the last 5 years plus. This market has stayed within this consolidation. When you spot this consolidation, your only job is to just trade it. When the market is at the top, just sell it. When the market is at the bottom, just buy it. Do you realize that this trading range is about 10, let me count that right, this is a 1000 pip trading range. You just buy and you focus on buying all the way to the top, and when it reaches the top, sell back down to the bottom, and you just do that and you'll be fine. Obviously, as you can see now, it is at the bottom, and so we can buy to the top, right? But I'm not going to talk about that. I just want to just focus in right now and looking for this. So this is the Australian dollar versus the Canadian dollar. This is now the Australian dollar versus the Japanese yen, and we're just going to look again. What do you see? Well, this one is not so beautiful, but because we're looking for ranges, we can see here, if I mark this as the top and if I mark this as the bottom, you can see that price went all the way up to the top, came back down to the bottom, went all the way back up to the top. And so what do you think is going to, you think you're going to make all the way back down the bottom? Well, it could, but of course, as you realize, it will take several years to do that. But I just wanted you to see that indeed market does actually do this, moves within a range, right? And of course there can be consolidation within consolidation, right? Now let me show you a consolidation within. So that is the broader consolidation, all right? Let me show you a consolidation within a consolidation. At one point in time, if we look closely, market was moving within that range. We just look. At one point in time, market was moving in this before it broke out. Just right here. Okay. At one point in time, we move up from down to top, top to bottom, and it just did that, and it stayed within that range for some years until it eventually broke out and made its way up to the top, because it's going to fulfill the greater range. Okay, so that is the Australian dollar versus the Japanese yen. Okay, and next pair that we will look at, we're just going to do this little by little. Alright, we're going to do this little by little. Australian New Zealand dollar. Let's see what we see here. What do you see here? Okay, well, we see for sure when the market started out, it started out there at this point here. Then it went up to the top here. So it moved from here, went all the way up here, moved from up there, went all the way back down to where it started. And we're going to expect it to go up in the many years to come. Right? So we can see clearly that this was within a range. Not only that, but if you look closer, let me just remove this, you can also see that it was functioning within another range. If I put a line here, watch this carefully. If I put a line here, you will see the same thing. Move from there, this is what it is currently doing now, to there, and it just does the same thing. Top, same thing. And these are all that sometimes we look for, and we just trade it. Bam, bam. Went up and touch it. You see how easy this is? It is predictable. The Forex market tends to do the same thing around the same price point all the time. Once you're able to identify what it is doing, then you just trade accordingly. You have no choice. If I am right here in the market earlier in this year, let's just call it, and the market in April of this year, and I see this consolidation, I have no choice but to say, okay, well, from 2013, 2012 to 2013, the market has been moving in this consolidation. I have no choice but to say, well, I am right here now in April of 2018. I'm going to buy this market up. You have no choice, because that's what it has been doing. Now, the truth is that if you bring this at a daily time frame, you can see the range at a greater, right? Down, up, and you can make all sorts of money just doing that. Okay, next currency pair. I want you to look. I'm going to carry it back to the monthly. Okay, I want you to look and tell me what you see. Let me just delete all of this. Okay, pause the video and just tell me what you see. Tell me what you see. I want you to open your chart, and if you don't have a chart, just look. This is the Australian dollar versus the US dollar. And what do you see? And I'm going to keep it zoomed out like this for you to first of all look. And then I'm going to zoom in more and just tell me what you see. What do you see here? Alright. Just pause the video and look. And I'm going to show you something now. If you look closer at this, I'm going to zoom in some more. There was a beautiful channel here. Just watch this. This is an actual channel. The market was now channels. I want to make something very clear. Consolidation is not an exact science. So I can't say it will reach this exact price point or it will go to that exact price point. We just have to trade close to or near to and then just stop trading. You see that? The market was operating in this channel down, up, down, up, and now it has broken through the channel. And that is a reality of trading. You can't be afraid to say, okay, well, you saw the price down here and you decided that you're going to buy and the market did not go in your favor. Then it's fine, then you just lose a trade. Then you have to then say to yourself, okay, since the market broke out of this channel, where is it going to? Has it formed another pattern? What is happening? How can I benefit from what is happening? If you can't see it, don't trade it. It's as simple as that. Move to another currency pair that you can see what is happening. Trade what you see. Now, a couple things about this. If you realize here, the market, I don't even need to go so far back, but let me show you something. This becomes very obvious now. The market started out here. Okay? The market started out here and it went up. And it has come back down to this price point. And so we're going to expect it to go up. Right? Because it is identifying, it is forming its channel. Okay? But another good reason why we're going to expect the market to go up is that when it broke out of this channel here, it has actually formed another channel. Let me show you. It formed this channel. Okay. And that gives us another reason to believe that it is going to go up. Right? Now it may look a little funny here, so if I put it on the daily time frame, just look at it. Watch this on the daily time frame. You can tighten it up a little bit more. But if you look, we are now on the daily time frame so that you can see it a little clearer. If you look, what was this? This was in a channel. Okay? Price just moved from the bottom to the top, down to the bottom, back to the top, and it has been doing that. It is now at the bottom again. So it could respect this line here and go back up, or it could come down to the bottom and go back up. Right? But it clearly, as you can see, it just moved within a channel. It broke out of one channel and entered into another channel. The Forex market likes to do the same things at the same price point. Let's go to our next currency pair. Let's go. Okay, let me see what the Euro New Zealand is doing. Right, and I'm just going to show a few. I'm going to go quickly now and just identify some for you, and then you can look for some others. Well, I see here that the market moved within this range here. That is what the market is doing for the greater part. Just filter out the noise. From top to bottom to top to bottom to top to bottom to top. I'm going to expect it to go down. That's the Euro New Zealand. Okay, let's look for another currency pair. Euro Aussie. Right, this is me giving you just free trade opportunity. Free trade opportunity. Let's look on this again. Top, bottom. If you want to tighten it up more, you can use right here. Okay, all the market did went bottom to top, bam, 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 bam. We're going to expect this to now make its way down the bottom, and it has already started to doing that. Let me show it. If you go on a different time frame, it has been making its way down. Okay, all right. next currency pair. Let me see if I can find some channels. Let me see if I can find some channel. I think the Euro US is in a channel, monthly time frame. This one I've talked about many times. Just look. Bam. This is a channel. Bam. See the channel there? And it looks like it's making its way down once again. A next currency pair. Euro Canadian dollar. Don't think this one is going to show much. Need more data. But this is actually in a channel. Actually, it's just that we can't see all of it. But it's actually in a channel. If I was using a different chart, you see it a little bit clearer. But this is actually in a beautiful channel. And you see, it just goes up and down and up and down and up and down. So I want you to actually practice identifying these, and just look, and just look for what you see. Let me see if I can find a different one. Pound yen. Okay, discussed the pound yen the last time. I was operating within a channel, and then it broke out of one channel, right, and has entered into a different channel. And so these are all over the market. You see them all the time. You just have to look for them. One more example, and then you can spend some time. This is the monthly time frame. You're by default, because you're looking at the monthly time frame, you're looking for range. You're looking for consolidation. You're looking for range. So if I mark this up the top, I'm going to use right here, because the market more frequently touches that price point, and I'm going to use here as the bottom. You realize, just want to show you something. Right here in 2011, the market come down to here, and you realize back in 2006 it came back down to the same price point, made its way down, and when it eventually makes its way back up. Now, what else can we see here? I think I was trading this at one point, because I saw, let me see if I can show it to you a little easier on a weekly time frame. Sometimes you have to change the time frames to be able to see the patterns a little clearer. Wow, I'm at the back side of this. This is a nice sell trade. Oh yes, I'm already selling this. Yes, I've been selling this. Okay. You got the channel. Market was operating in this channel. Up, down, up, down, up, down, up, down. You notice that it never made its way all the way down. It went up and retest this angle before coming down. That is sometimes the market does that at times. Alright, so like I said, but the channel generally remains until it breaks out of the channel. If it reverses within the channel to retest this angle, right, then more than likely it's going to push back down, which is what it's doing, exactly what it is doing as a matter of fact. Alright, so that's it for now. Just spend some time looking at your charts and identify the channels. Once you're able to do that, then at least you know which direction you want to trade. In our next video, I'm going to teach you about the 5 steps to trading, right? And then we'll be able to put everything together and create a trading plan. All right, God bless you.